Everyone is searching for that one penny stock, that one low-priced sleeper under $10 that suddenly wakes up and shocks the entire market. The kind of stock people look back on in 2026 and say, "How did I miss that?" And the truth is, some of the most explosive companies don't trade at $50. They trade at $1, $2, or $4 long before the big money arrives. But here is the twist most investors ignore. The stocks that often deliver the biggest returns are not the ones that look perfect today. They're the ones sitting in difficult industries, going through turnarounds, or quietly building something the market hasn't priced in yet. And today, we are breaking down 3 U.S.N. listed penny stocks under $10 that could surprise everyone by 2026, not based on hype, but based on real catalysts, restructuring, and long-term demand. Before we dive in, do me a favor, hit the like button and subscribe. It motivates us to bring you the latest market opportunities, cheap stocks, and financial insights every single week. And remember, this video is for educational purposes only. This is not financial advice. Always do your own research, consult professionals if needed, and only invest what you can afford to lose. Now, let's start with a company that has been beaten down, ignored, and left behind, but suddenly sits at the edge of a massive turning point. Our first company operates in a space that could explode in demand between now and 2026. Global LNG exports. This company has spent years fighting for survival, restructuring leadership, and trying to secure the financing needed to unlock a multi-billion-dollar infrastructure project. And while the market remains skeptical, the groundwork being rebuilt behind the scenes could change everything. Before I reveal the name, here is the key insight. The stock is so oversold that even a single major announcement of financing update, an offtake agreement, or a strategic partner could trigger a major move. And with long-term natural gas demand increasing globally, the timing is more important than ever. And that company is Tellurian, ticker TEL. Right now, it's trading at only 99 cents under $1. Tellurian's entire future revolves around the Driftwood LNG project. If they secure full funding or land a long-term supply agreement, the stock could move aggressively. That's why institutions still watch it closely, because the upside from successful execution is enormous, even though the risk remains high. This is a classic high-risk, high-reward energy play where 2025 and 2026 could finally unlock its long-delayed potential. Our next company is one that many investors have given up on after years of underperformance. But giving up might be a mistake. This business sits at the heart of the hydrogen energy ecosystem, a sector that could receive massive support through government incentives and large-scale clean energy adoption. And despite its challenges, the company still controls infrastructure that newcomers simply cannot match. Before I reveal the name, here's what matters. The company is now aggressively cutting costs, restructuring operations, and working toward improving margins. For the first time in a long while, early signs of a stabilization trend are beginning to show. And that company is Plug Power, ticker Plug, currently trading around $2.20. Plug Power has been volatile, no question, but volatility is where opportunity hides. The company is aiming for profitability improvements in the coming years, and if hydrogen adoption picks up or Plug secures additional large contracts, the market could re-rate the stock significantly. 2026 could be the year the hydrogen narrative either collapses or finally becomes real. And if it becomes real, companies like Plug Power would be positioned at the front of that wave. Our final company is one people love to joke about, but those people usually have no idea what this company actually does today. This is no longer a phone company. It is a cybersecurity and automotive software company, and it is reshaping itself in ways that could matter significantly over the next few years. Before revealing the name, here is the important part. This company operates in 2 markets that grow stronger every single year: digital security and intelligent connected vehicles. The market hasn't priced in its transformation yet, but transformation is exactly what's happening. That company is BlackBerry, ticker BB, now trading around $4.32. BlackBerry SQNX operating system continues to be adopted in more and more vehicles worldwide, from EVs to autonomous systems. Meanwhile, the cybersecurity division, while under pressure, is being restructured to improve profitability. Licensing deals, margin improvements, or major auto industry partnerships could meaningfully reshape the valuation in 2025 and 2026. This is a long-term rebuilding story, but the potential upside exists if execution improves. So, Let's recap. Tellurian, Plug Power, and BlackBerry are three very different companies, but all share one thing in common. The market has priced them for weakness, not for the potential catalysts ahead. And that's exactly where opportunity comes from. For Tellurian, the key is simple financing and LNG demand. For Plug Power, turnaround execution and hydrogen adoption. And for BlackBerry, profitability improvements and automotive software expansion. None of these are guaranteed winners. They are high risk, high reward plays, but the kind that often surprise the market when conditions shift. As 2026 approaches, these companies will either break down or break out. And smart investors know that these moments of uncertainty are where long-term opportunities are born. If you found this video helpful, make sure to like, subscribe, and turn on notifications so you never miss future breakdowns. We cover cheap stocks, AI stocks, turnaround plays, and market opportunities every single week. Thanks for watching. Stay informed, stay disciplined, and I'll see you in the next video.